Now let's address Avenue Supermarts and the margin surprise. Abneesh Roy, Executive Director, Nuvama Institutional Equities, is now joining in. Abneesh, your first read of Avenue Supermarts, and is there enough in the performance for you to go ahead and buy the stock today?
Hi, good morning. Yes, it's a good number. I think this stock is in the oversold zone. Of course, FI is selling, we need to see, but I think a few key positives in the results. So clearly, around 50 bips improvement in gross and EBITDA margins. Even in terms of DMart ready, our calculation suggests around 20% kind of a growth, which is a reasonable number. Third, of course, is in terms of store addition, around 28 stores in the 9 months they have done. And generally in Q4, the quantum of stores really addition improves. So we see that around 60 stores addition can happen. It is not a cheap stock, but I think it's an oversold stock. So I think near term it should do well. Here we need clarification on whether the gross and EBITDA margin sustainability is there or not, because it has corrected a lot in the past few years. So it could be bottoming out. Last 2 quarters also, there was a small dip. This quarter, there's a small improvement. So sustainability is important, but yeah, near term, the stock would react a mild positive because of this number.
All right. Hi, Abneesh. Thanks a lot for joining in. So maybe some kind of relief is what we could see, since the quarterly update wasn't too great, but the margin surprise is encouraging and the stock has fallen considerably. What about Reliance Retail? Any read-through? I recall when these numbers came out, Reliance as well was under pressure. There were some fears that Reliance Retail as well will see some pressure. What are your expectations? Those numbers come out later this week.
I think difficult to take away from one result to another, because retail, as you know, is fairly competitive and every company will have its nuance, and the business models are different. Demand is much bigger and all those. But yes, we do see that in this quarter, the GST transition happened. So is there any interplay between the reduced discounting and GST rate cuts? We need to see that. Second, of course, for DMart, one more thing which is positive in terms of lease, because generally DMart likes to own the stores, which limits the expansion. What we are picking up clearly, lease liabilities versus assets, we see a movement there. So that could mean that in the new market of UP and some of the other market, companies a bit more open on the lease rather than ownership. So I will say that yes, we need more clarity here, but I think every retail company will have to take on its own rather than extrapolate.
What's the fair valuation multiple for a company like Avenue Supermarts, which is facing increasing competition from quick commerce, and it's showing up in the numbers? Revenue, same-store sales growth is slowing down. Not talking about this quarter where there could be an impact because of GST rationalization, but as a broader trend, what is the valuation multiple that you think is appropriate for this company?
So yes, you're absolutely right. Currently, if I see the stock trades at 90 and 75 times FY26 and 27 P multiple, we have a target price of 4351. So we see small upside here. You are absolutely right. E-commerce, quick commerce, new players are also coming. Amazon now has become extremely aggressive, which may bode well for the FMCG companies, especially food companies. But that also means that Avenue Supermart and some of the other players in quick commerce and generally retail, they will see that competition. So that continues to remain. I think for the significant re-rating for Avenue Supermart, around 17-18% sales growth and slight margin recovery, I think that will be needed. So we'll say that currently 4351 seems to be the reasonable target price at this juncture.
All right, Abneesh, very quickly, there are two stocks that have got hit very hard in the last few trading sessions. One is ITC, post that tweaking in the duties. The stock is down 16%, I think, in this year itself, and we're only getting started. And the other one is Trent. That as well is down close on 7% post their quarterly update. Any view on both these two names? Would you look to buy either of these two?
Sure. Firstly, I'll take on the retail trend. Our topics currently will be Titan and Jubilant Foods. Avenue Supermarts near term could do well because of the margin surprise. So trend as of now, we continue to wait for improvement in terms of growth numbers, margins, etc. Coming to definitely ITC here, I think FI selling continues to remain a overhang, but in terms of pure valuation, dividend yield around of 5%, improvement in FMCG, agri, paper, etc. Those are positive. I think the stock further downside seems limited. Only FI selling continues to be a unknown development, because we are seeing that across the board that selling is happening. One more important thing is, I think in February and June, we expect 2 rounds of price hikes by ITC to pass on that. So, and next year, the chance of a tax hike remains very, very low given the quantum. I think from a 2-year perspective, ITC makes sense. near term, definitely overhang is there, but I don't think the correction too much I expect on ITC from here on, except the FI selling, which is very difficult to predict.
Okay, and there are price hikes on the anvil in June for ITC, as you expect. Thank you very much, Abneesh, for joining in.